Hi, in this video we're going to walk through how to use a stock selection guide to choose a great investment. Our guide to the stock selection guide is Mark Robertson. Mark is the founder of Manifest Investing and has a vast knowledge of investing and SSGs. We'll start by discussing how to analyze a company's financials using the SSG. We'll then walk through a stock selection guide example. Finally, we'll discuss going beyond stock selection by using the SSG to manage your portfolio holistically.
Understanding who they are. And that doesn't mean you have to understand exactly what they do. Like, I don't know exactly how semiconductors and chips work, but what I count on, because you hear this all the time. Buffett has often said, I won't invest in companies that I don't understand what they do. I look at it as, I don't need to understand how that chip works, but I have to understand that I think the people running the company understand that. And it's a big difference. So you can invest in any company so long as you have trust in management. First thing, what are their sales? What is the sales trend for the company? What is the growth rate of the company? And then you basically leverage that into, okay, what is their field of opportunity? So you were talking just a few minutes ago about utilities, renewables, all that kind of stuff. You have to take a look at, what does that environment look like? And where is the company in their own life cycle? Are they brand new, emerging? Are they mature? Many of the companies that are held by investors within our community are more along the faster growth, but not too fast, but mature companies. And that can be very profitable, very rewarding. So where is it in its life cycle? And there actually are a few companies that reach that rather nasty endpoint of, if they don't keep reinventing themselves, they can actually go and stink. So you have to learn how to watch for those too. Where's the company in its life cycle? What does its growth trajectory or trend look like? Most important first step, it is absolutely, as Thomas O'Hara, he was chairman of the National Association for over 50 years, he used to say, the sales image, what you see, what you imagine for the sales going forward, is the straw that stirs the drink. And that's the first thing on the stock selection guide.
When you guys look at a trend for sales, what on the stock selection guide, how does someone know that the sales trends are going up? Is there something mathematical there, or is it really about taking a look at the data and getting a good feel about it?
Well, see, that's part of the secret handshake. So if I tell you, I might have to take you out.
What?
No, it really is. It comes back to Isaac Asimov and explaining that all growth is exponential. And as an engineer, we both understand that. And the human mind can't handle that. We actually cannot handle understanding exponential growth. So when you look at the stock selection guide, it is actually semi-log. It's a mathematical thing. If you're out there and you're listening to this and I just gave you a migraine headache, fight through it. We're going to show you how to handle that. But literally, as an engineer, you understand there are a few things that we look at in an exponential manner. So when you plot the sales on semi-log graph paper, special graph paper, anytime you have a straight line, you have a constant growth rate. And you literally are measuring the slope of that line. It's a thing called regression. You don't have to know that. But again, you're looking for this characteristic, this trajectory. And you want to understand what that trajectory is. Is it 5%? Is it 10%? Is it 15%? The difference between 5 and 15 may sound innocent, but it's massive. And we're going to talk about that too.
For the SSG, you got the sales down. You believe there's a trajectory. What are those other metrics that you look at to really measure if the investment's a good possibility?
Well, that's kind of step two. Step two of a stock selection guide. Once you think you have some comprehension of what the sales trajectory looks like, you basically drop down and start thinking about the profitability of the company, the long-term profitability of the company. So you're measuring it. Many people use earnings, net income, all that kind of stuff. People on Wall Street are more likely to use earnings before interest, taxes, depreciation, all those financial gizmos. That's cool. You can use cash flow. The Value Line Investment Survey uses cash flow instead of earnings. So you basically have to be looking at some form of profitability. I don't know if you knew this, Chester, but the original stock selection guides did not plot earnings. You know, basically George put the sales picture on there, and then he plotted the pre-tax earnings. So he's actually looking, and that's all that was on the visual analysis back in the day.
So he was looking at EBIT.
So he was looking at EBIT, and you know, again, I think it's important for, you know, experienced investors or newbies to just understand that there are a variety of flavors of, you know, ratios. There's, you know, you can get all hung up on ratios. We basically just look at the picture and say okay or not okay.
How do dividends play into the stock selection guide?
Okay, so with the stock selection guide, the result or the output is basically an expected return or return forecast. That return forecast includes the anticipated dividend stream. So again, the total return on a stock is the change in the price, hopefully an increase, you know, plus the dividends that it pays out. Think of dividends as rent. You know, rent. It's taxable, by the way, in most cases, unless you're talking about a retirement account, but it's rent. So again, it's a combination of the two. What is a stock selection guide? How do you use it? What do you do with it? This is what it is. It's basically an opportunity to comprehend the business model and the environment for any company. You know, what is their field of opportunity? What does that trajectory look like? People are, you know, Bob Wynn talked a lot about people being different, and we certainly agree with that. Some people love numbers, some people love pictures, so you have to accommodate both when you're trying to do this stuff. I mean, I had a young lady in our investment club in Chicago that was really math phobic, and she was having a hard time with the investment club. And I sat down with her over lunch one day and said, you know, really, you just have to be able to understand whether that picture is up, straight, and parallel. She goes, really? You know, because she was artistic and she got it. So we basically showed her how she could access all of these images for a variety of companies. You're just looking for these. You're just looking for up, straight, and parallel, and then dig in deeper into what the company does. This happens to be Neogen, I think. But for any company, you're basically looking at that top line, just like we talked about a few minutes ago, the straw that stirs the drink. What does that look like up there? What might the future look like? And based on that, in the next 5 to 10 years, what might the company be worth? And we're always looking for up, straight, and parallel with stock selection guides.
The little candlesticks in the middle, what are those?
Those are 52-week high and low price bars. So those are annual price bars. So when somebody like Bob Wynn says we think that earnings follow sales and stock price follows earnings, ultimately it does.
Yep.
I mean, if I were to tell you that the next year on this chart was projected to be down here, I would also believe that there's probably going to be a drop in price.
Yep.
Ultimately, I don't know when, but it will ultimately track that.
Yeah.
In a company that is struggling to survive, this becomes crystal clear.
Yeah.
And you basically say thank you and walk away from those.
Yep.
All right. This is also what some people see as a stock selection guide. Lots of calculations and ratios and all that stuff that you love because you're a nerd engineer. By the way, when I say nerd, that's a term of affectionate endearment and respect.
I love it.
So a lot of people, when they become involved in the investment club movement and stock selection guides, this is sort of what they see. That young lady I just described, this is kind of what she saw from the stock selection guide. So we counter with, this is also a stock selection guide. Fill in the 3 blanks. So again, what's the trajectory look like? What does that annualized sales growth look like? Okay, let's say it's 10%. While maintaining what level of profitability? In this case, we're talking net margin. That could just as easily be EBIT, like you said a few minutes ago, or EBITDA. Mm-hmm. But whatever it is, some measure of profitability or cash flow, what would that look like? And when it does, what PE ratio? And again, you've heard me talk about PE ratios. We really de-emphasize, and I'm sugarcoating, current PE ratios. We actually think more about what the PE might be down the road based on the environment, the study of the company, the industry, all of those characteristics, point in the life cycle, and obviously the growth. So the answer to those three questions will actually generate a return forecast. So an expected return. Okay, so that's literally what a stock selection guide does. That is the result of a stock study. What is the return that we might expect from the company? So somebody asked me one day, Mark, if you're in an investment club, would you accept this if I basically printed this page and filled in those three blanks? And I said, yeah, if you can defend why you filled in those blanks with what you filled them in with, absolutely. That is a stock selection guide. So here's a little deeper look at a company like Neogen. Again, a relatively small company out of Michigan, in the foods, literally invented in the dairy to keep cow udders clean and detect any problems there. You can think about salads and food poisoning, all that kind of stuff. That's what they do. So this gives you a look at this is all stock selection guide stuff. That image on the right, upper right, is a stock selection guide. The numbers on the left is a stock selection guide, spelled out in this case in just a simple spreadsheet of literally what do we expect for growth. In this case, 14% back at the time of this study. Profitability, 13%. That's based on looking at this image down here. So again, we're looking at these images and forming conclusions that we think the company can stay somewhere in the low teens for profitability. The PE ratio, a little bit hefty, but this is a small, relatively fast-growing company. Plus, you can see that there's precedent. As we do a study like this, we probably are pretty focused on this also. So again, the image and understanding of what's going on with the company is literally right there in front of you.
So just some questions here that maybe someone that's really new to investing might ask. So the PE ratio, that line, the black line, the black marked line, is that indicating a trend that you believe that it should continue seeing, or what is that showing there?
So it's just simply a mathematical trend. It's a regression just to give you a quick guide as to what's been going on. Obviously, if you drop these off and basically ignore them, this flattens out. So again, you have to decide what period is relevant. You can see that up here in the analysis, whoever did this, I actually don't know who did it. They didn't choose 60. They didn't choose this number. They chose a number somewhere down in this area.
Yeah.
For the project. Again, the key word here is projected. This actually should say projected. So again, we're thinking out to what the PE ratio might be in the future. So we actually have a cross-checking methodology championed by Greenblatt, Joel Greenblatt, if you're familiar with his work, that basically leaves the PE completely out of it.
Interesting.
And can actually double check that number, and then we reconcile this number against that.
So looking at this, it looks like because sales continues to grow, or it's expected to grow, they were comfortable with the price earnings ratio of 45 because sales and earnings should continue growing, it looks like.
Yeah, a very steady business. Are they going to be susceptible to hiccups? Yeah, they're actually in the middle of one right now. That's where that big drop is from, along with the market drop.
Yeah. But that should be buoyed by the fact that they're likely going to continue with their sales increases.
Yeah, well, right now, remember we talked about risk not being anything to be afraid of. It's actually opportunity. This particular company is engaged in a joint venture with 3M. They're actually doing spin-offs and mergers and that kind of stuff. That has cast uncertainty. So what this community of investors, in my opinion, our community of investors is looking at a company like this saying, okay, the 3M combination is a bit of a mystery, but this company, and 3M is formidable also, extremely formidable. They probably come out of whatever challenges they have on the other side. Management has demonstrated consistency and the ability to achieve growth in the past. So whatever the current challenges are, perhaps they come out the other side pretty good. So, again, speculation, but it's informed speculation.
Yeah.
All right. So again, I just encourage, think beyond stock selection, think beyond the guide. The community is a gateway. We do believe in the notion of investing regularly and finding great companies, own them for as long as it makes sense to do so. The stock selection guide is actually probably misnamed. George said that himself. It really is an analysis guide, which can also help with the decision to sell a stock. So it's not just about selection. And being a little bit flippant, anybody can choose them. I can point to a number of people out there in the investing world that are really great stock pickers, but they stink at portfolio management.
Yeah.
So the stock selection guide, think of it as a stock analysis guide. I'm not committing blasphemy here. I actually presented this in front of George's daughter, and she agreed. She said, yeah, he thought the same way. So he probably picked the name badly. So it's not just about stock selection. It's about the analysis of an opportunity and the stewardship affiliated with buying it and holding it for as long as it makes sense to do so. Buy it at a great price, hold on to it as long as you can. Again, understand risk, recognize it as opportunity, and don't be afraid to invest in stuff off the radar screen. Small and medium-sized companies, some in your backyard perhaps, can really be exciting and rewarding.
With Stock Boss Up, I really believe that if we want people to learn investing right, they need the right processes and methodology. And I think the stock selection guide, better investing, manifest investing, and then Climb USA with Bob Wynn. I mean, they're just doing the right things to get more people into successful investing. Successful investing is a very important part of wanting to get people into investing. So Mark, thank you so much for joining me today.
Oh, you're most welcome. Thank you.
Check out manifestinvesting.com if you want to find a very powerful stock screener and just great content on new stock ideas. If you want to try the stock selection guide, check out betterinvesting.org. And if you want to find the best stock picks, check out stockbossup.com. Mark, thank you so much.